M Ltd of Mumbai has a branch at Patna. Goods are invoiced to the Patna branch, the selling price being cost plus 25%. That is, goods are invoiced to the branch at selling price, which is nothing but cost plus 25%. The Patna branch keeps its own sales ledger and transmits all cash received to Mumbai. All expenses are paid from Mumbai. From the following details, we have to prepare Patna branch account. We have opening stock at invoice price, closing stock at invoice price. Then we have opening and closing debtors. We have cash sales, credit sales, goods invoiced from Mumbai, then some expenses of the branches. Okay, with the following all this information, we have to prepare Patna branch account. So let's do that. We'll have Patna branch account. So let's capture the opening balance first. To balance brought down. And what is the date? The dates are 1st Jan 2015. So 1/1/2015. We have two items. One is stock, the other one is debtors. Then to capture debtors, we need branch debtors account. We need Patna branch debtors account. So what is the opening balance of stock and debtors? Let's capture. It is 1,250 and 700. So stock is 1,250. Debtors is 700. Let's write that in debtors account also. To balance brought down 750. Done. Then we have closing stock, but before that you have opening stock. Then try to remove the profit loaded on the opening stock. Simple, by stock reserve. By stock reserve and entry, or what is the profit? 1,250 is for 125. What is for 25? Okay, that will give us what is the profit loaded on the opening stock, and that works out to 250. Fine. Now what is the next item? We have debtors opening and closing balance. Of course, we'll deal with that. Then we have cash sales for the year. So we are going to get that money. So we'll write by bank, and it is going to be 5,400. Then we have credit sales for the year that will increase your debtors, and it is 3,500. So we'll say to sales, it is 3,500. Then we have goods invoiced from Mumbai 9,100. Okay, so we'll say two goods sent to branch. Two goods sent to branch. What is the amount? 9,100. Now we have to remove the profit that is loaded on this amount. Basically 25 on 125. So we'll say buy goods sent to branch. And how we'll calculate that? It is simple. 9,100 divided by 125. What is for 25? Multiplied by 25, and that works out to 1,820. 1,820. Okay. So in this way we have removed the profit loaded on goods into branch. What else we have? We have rent, wages, sundry expenses 400, 340 and 80. Okay, all these are branch expenses paid by HO. So we'll say to bank. Okay, the expenses of branch paid by HO, and they are 400 plus 340 plus 80. Okay, so all this put together works out to 820. Then any other item? I think we have covered all. It means we have to find out the closing stock and closing debtors. Closing stock we have, it is 1,500. Okay, so we'll write here by balance carry down, and in that stock, what is the value of the stock? It is 1,500. Okay, so you simultaneously will also remove the profit that is included in the stock. So we'll say to stock reserve. To stock reserve, and what is the value? It is 1,500. Okay, This 1500 is for 125. Okay, so it is 1500 divided by 125. What is 25? So what is the value? You get something like 300. Okay. Then we should know what is closing debtors. We should know what is closing debtors, and how will you find the closing debtors? You know what is the opening balance, you know what is sales, and you know what is closing debtors. I think closing debtors is directly available. So when closing debtors is directly available, you'll be able to find out what is the money you have received from your debtors. Okay. So here we'll say by balance carry down. By balance carry down, it works out to 900. So now let's total the highest side. The highest side total works out to, I think the opening balance, let me cross check whether it is right. Opening balance is 700. I have written it as 750. It is 700. So now let's total this. Total works out to 4200. So the difference is nothing but the cash realized from debtors. By cash, how much? It works out to 3300. Okay. Now this cash will be transmitted to head office. So here we have written bank as 5400, right? We'll just modify, because this 5400 is basically cash sales. We'll now include the cash that is realized from the debtors also. Okay, we'll include the cash that is realized from debtors. So it is 5400 plus this figure of 3300. So both put together we get 8700, right? And what about the closing debtors? Closing debtors, we know it was 900, right? So 1500 plus closing debtors of 900 gives you 2400. Fine. So now let's total the highest side. So if you total the highest side, I think you will get it on the credit side. It works out to 13,170. So write it on both sides. 13,170. So on debit side, if you check, there is going to be a balance, and that balance works out to 1000. That balance works out to 1000, and this 1000 is nothing but the profit of this branch. Okay, so we'll say to general P&L account. To general P&L account, it works out to 1000.